Peter, you getting swept up in the Commanders fever in the Northern Virginia, D.C. Area?
Oh, yes, I am.
Are you okay? We have never had this conversation. Are you a Commanders fan? I mean,
Oh,
no.
yeah, I 100% am. I'm
Ah,
not going to say die hard, but I grew up a Commanders fan. It's always been a love-hate relationship. Um, I still find myself calling them the Redskins.
hmm.
I still have Redskins stuff around the house. Um, right here, um, s- signed by Daryl Green.
Oh,
Um, yeah, so it's love the Commanders.
one of the most underrated players in NFL history, in my
Oh,
opinion. Daryl Green
hands
was so
down.
good for so long. So,
Him and London Fletcher.
yeah.
I was a big Sean Taylor fan back in the day. I love watching 21 play. It was such a shame
Oh
his
my
life
God,
got cut
it's
short.
Sean Taylor. The
Yeah,
worst
man.
part is like he was just as big as LeVar Arrington, but
Move.
could run just as fast as every wide receiver out there.
Yeah. What's wild this week that came out was I mean, it's been a season long thing, but the Giants could have kept Saquon and drafted Jaden Daniels, and who knows where the New York football Giants would be as a result of that. But I'm sure that's good NFC East fodder for you to trash talk your other teams in the division now.
I mean, one of my good friends is a Giants fan, so it's I'm happy for their loss.
Old school NFC East, NFC Championship game this week, going to be fun.
That's right.
Yeah.
That's
And
right. Oh, and I know we haven't talked, but congratulations on the Ohio State.
oh man, yeah, I'm still my voice and my liver and my brain are still a little foggy from the festivities Monday night. But yeah, that was great. I promised Robbie I wouldn't bring up, what they did to Texas in the semis. Robbie, big one. So we won't go there. But it was really surreal with the loss to Michigan and the pitchforks out for Ryan Day, and now he's legendary in Columbus. So it's been a whirlwind.
It's wild that they beat the number two team, the number three team, number four team, number five team, and then quite a run for them. And even Indiana, when Indiana was in the top 10 too. What a great season, except the team from the north. But maybe next year.
We got to take care of that next year. Yeah. So,
What,
but
what's your do you have an affiliation? Did you go to school there? What you're just Ohio guy?
so I didn't even go to college, but one of my very good friends from high school played tight end at Ohio State. He graduated a year after me, high school. So with the Eddie George, Bobby Hoying, Terry Glenn team that was really, really good. So I spent a lot of time hanging out at bars with those guys and just riding their coattails. And my son now is a sophomore at Ohio State, and most of my family has gone to Ohio State. So that's the lineage.
Eddie George, coach of Eastern Tennessee State. I think he's getting some bigger name jobs that he's interviewing for this year. But I remember I loved the Titans when I was young. Him and Steve McNair. They're
Oh
bad.
yeah, yeah. Eddie George was incredible.
He was a heck of a running back.
Oh man, with Orlando Pace was on that team too, who almost won the high. He was in the Heisman finalist as a left tackle. Do you think of how absurd that is? I mean, forget the pancake blocks that he had his senior year, but it was crazy.
Oh
So,
yeah, yeah.
all right, well, let's go ahead and get into it. This is the big picture. I'm Rich Swerbinsky with Onward and Upward Consulting, and the show presented by our great friends and partners at Depth. 20 years of very ably serving the mortgage and fintech communities, brand building, communication strategy, public relations. Carrie Milam and Leslie and Lindsay, just great people as well at Depth. So if you're looking for somebody to help you tell your story, uh, they no better firm. So big thanks to our friends and partners at Depth. So this week, Rob unavoidably detained. I think he was hanging out at Robbie's house, and Robbie kicked him out, and he's on the road now. So we're joined by Robbie Chrisman. Robbie, how you doing today?
Good. Always happy to be here. I spent a good chunk of the morning with my dad, and I've been properly prepped on all things credit union to talk to Peter about. And actually, my dad and I spoke at a UFC
Robbie, you're
last week.
frozen. Oh, you froze up for a second. I think we missed a little bit of that. The UFCU, and then I think you
Oh,
froze.
I spoke. My dad and I spoke to a UFC team members in Austin last week, so I'm ready for all things credit union. I've been prepped.
Let's do it. All right. And this week, our special guest, really, really pleased to be joined by good friend, great guy, the president of ACUMA. And is it ACUMA or ACUMA? That's going to be the first question, Peter. So we'll prep you, because there's big debate in the industry about that. But their president, Peter Benjamin. Peter, great to see you, and thanks for joining us.
Thanks for allowing me to be here. I feel like I've been stepped up to the big leagues. Truly an honor.
And what is it? ACUMA, ACUMA,
No,
ACUMA?
ACUMA, 100% right.
ACUMA.
ACUMA.
Okay. All right. So I've had it right the whole time. All right. Good.
Oh, yeah.
So, all right. All right, so Robbie, getting into things here, a lot to discuss. President Trump, I mean, housing right out of the gate, as soon as he takes the Oval Office, an executive order to reduce the costs of housing, sans details, but one of the first day actions of the new president. And then this morning, I don't know if you saw this, speaking at it was the World Economic Forum, he demanded that rates drop. And and basically said he was going to get it done, not only in the U.S., but for the whole world, really. So a lot to chew on there. Your thoughts of the new president, new old president's actions and words on housing his first couple days in office.
Well, if I say something he doesn't agree with, I'll probably freeze again. So keep that in mind. Down demands it. Yeah. Oh, did I freeze?
Just for a second. Yeah, right.
Yeah, exactly. Nobody can control, no president can control interest rates. The Federal Reserve can't control interest.
See, look at that.
Seriously.
The Trump,
noble.
the Trump, his people have frozen up Robbie, I think. So, all right, we'll see. Hopefully Robbie can get that sorted out. Peter, I'll go to you. Your thoughts on you froze up again, Robbie.
I know. We're gonna see the Emperor does wear pants for shows. Let me go fix my route.
So Peter, your thoughts on President Trump's words, actions on housing the last couple of days?
I mean, so we are most certainly watching it. We started an executive order tracker that we're going to start sending out to all of our members because, I mean, some of the things that he's talking about doing, could potentially impact our members, not just from a mortgage standpoint, but from a credit union as a whole standpoint. It's I know we're going to talk about what could happen in the economy. I mean, he's making some radical changes that can he realistically pull off? Probably not. But is this do I want to grab some popcorn? 100%. Is this good entertainment? Absolutely. It really is. It's just I'm enjoying just watching it. I really am.
And Robbie, this is one of the things me and your dad really disagree on. I'm bullish on mortgage rates this year, honestly. I think that there's a lot of fear and loathing priced into the mortgage bond market. I think they're thinking worst case scenario on this tariff thing. He's now put out a little bit more teeth on the tariffs. Canada and Mexico, allegedly Feb 1, 25% if they don't address immigration and drug trafficking issues. China, no date, 10%. Fentanyl and the trade deficit. I mean, do you think there's a world where Canada and Mexico don't do what they need to do, or at least, to avoid these tariffs? I mean, to me, it would be economically disastrous, right? For those countries.
So I'm going to try going off video and maybe that will improve bandwidth here momentarily. Is the audio coming through okay?
Yeah, audio's good.
Okay, cool. What I was going to say is all this talk about interest rates is so interesting to me because if you're looking at a median priced home in America, 450 grand, 500 grand, what is the difference in an 1/8 or 1/4% rate for your monthly payment? $50, $75? What are insurance premiums versus that? We're talking hundreds of dollars on insurance. Why aren't we focused on insurance, Mr. Trump? Why are we focused on other things that are scuttling deals that are having a much bigger impact on home affordability? Rates obviously get the headlines, and that's why he goes there. I'll address what you just talked about with Canada and Mexico. Look, I'm trying to give him the benefit of the doubt here on its a negotiating tactic for leverage to get something else. I'm not a big fan of tariffs in general, just kind of economically speaking. I would think that these threats or whatever it might be lead to something else later on. I don't think tariffs are a long-term solution to much. Hopefully that wasn't too political for half of our audience here.
We'll see what happens. Yeah, I mean, to me, I think it's negotiating leverage, and the reality of like big tariffs being implemented for anything more than maybe a few weeks while they negotiate. Because I think what he's asking for, at least in my opinion, is attainable from these countries. Like, yeah, control your immigration issues, and stop drugs from coming into the country. I think those are fair asks, and so we'll see what happens. But if indeed the tariff fears don't come to reality, we're going to see some relief in mortgage rates.
Wait, I don't agree with what he's trying. I like thick Latinas and mind-altering substances. I'm saying no, forget these tariffs, man. What are you doing? Sorry.
Love it, love it. So, well, good stuff. We'll see what happens there. We'll certainly be chronicling it every Thursday here on The Big Picture. Interest rates, the number one topic in the industry for all the obvious reasons, and a lot of factors at play here that could shake things up there. But Peter, moving things over to you here. The state of credit unions in mortgage lending. I had the luxury and the pleasure of attending your conference in Vegas this past fall. Just an incredible event. I mean,
Thank
not
you.
only the execution of it in the venue, but just the true collaboration, the spirit, the upbeat vibe that it was like just for what ails me right now in the mortgage industry. Spending a few days with some great credit union mortgage bankers across America. Cautiously optimistic, but a pretty upbeat group. I guess, give us the state of the union of credit union mortgage lending to get things started here, if you could.
I mean, everyone I talked to, I think, is still very much optimistic. They're going in almost staying the course as to where they were. I think they're still very much thirsty for that knowledge, thirsty for education, hesitant as to what is going to come next, but staying the course. I'm not really too sure about whether or not they're going to have those layoffs like we saw last year. And I think that was concerning, right? A lot of credit unions, for the first time in a long time, made some tough decisions, right? Historically speaking, credit unions have never really laid off staff. Now, whether that reduction of staff was the result of COVID hires, the refinance booms and we bring on loan officers, or whether or not it was true squeezing of budgets. But last year credit unions really did have to make some tough decisions. Now, the credit unions I have talked to, are still unsure whether or not going into 2025 if they're going to have to make those tough decisions. Now, the ones I have talked to seem to be somewhat optimistic about the outlook. They're already planning a little bit more travel. They already are anticipating being able to go to more events, which if you're already planning on more travel, that already means a better outlook for originations, lower interest rates. Hiring is a different story. It means you're maintaining the status quo, but travel is always a plus because first thing that goes, always travel.
Yeah. And before I pass things over to Robbie here, Peter, just one follow-up to that is, on the credit union side of things, the just the I guess some of the advantages maybe they have over other lenders in the space that independent mortgage banks don't have, or maybe even large banks.
Everyone has great service, right? I always hate when someone says, go to a credit union because it's great service, right? And everyone has great service, and I would never take away, having worked at banks, whether large, small, community, everyone has great service, and everyone can buy technology, and so I'm never going to take that away from, the large banks of the world or a community bank or an IMB. But what I think it really goes beyond, that the idea of the software, right? Yeah, I mean, yes. If you look at the look at the numbers, credit unions historically have always had, lower interest rates, and from a cost perspective, break it down nationally, you probably can get a more affordable mortgage when you go to a credit union, right? And that's just the truth of the matter, right? But I think when you look at credit unions and that competitive advantage that they have over the others, and that's, we'll say independents and banks, I think it's that trust factor. Um, I think that's what the credit unions have. So it's like going into your local Cheers. It's just like the show. It's Norm all over again. And I often use this analogy. It's I can't tell you how many times I was a fly in the wall when I was the head of a mortgage division at my last credit union, and I would walk into it. I would just be in the branch talking to the branch manager, and a member would come in, and anyone they call them MSRs, but they're tellers, would just a member would walk in and they would say, hi, Mr. Smith. And it's just like they know and they build those relationships and they're long lasting, and they ask about the kids, they ask about the family, and they're building this not just trust with the individual, they're building the long-standing family relationships. I think that's the advantage that credit unions have. It's that trust, and I don't want to say we need to take advantage of it because it has such a negative connotation, but we need to leverage that trust that we have to really foster more families and homes within our communities.
I remember I interviewed with a credit union right out of college down in LA, and it was on the capital market side of things. Here for a long monologue, I'm going to go off video just in case. But it was on the capital markets side of things, and essentially, I was asking them, "Hey, what takeouts do you have? What technology do you use?" And they were like, "We have a couple takeouts," and it seemed like it was behind the rest of the industry. And since then, this is 15 years ago, so it seems like credit unions have really come up to speed. And in addition to their advantages surrounding membership, surrounding their cost of funds, they've really improved their tech stack, improved their execution, and it has given them that much more of a leg up on the playing field. So shout out there. I'm like I said at the start, I'm learning more and more about credit unions all the time. Like I guess if they have less than $10 billion in assets, they don't necessarily come under CFPB regulations. I learned that last week. Uh, there's been this feeling though, and I kind of alluded to it there, that credit unions live in a little bit of a bubble, or maybe historically people thought they lived in a little bit of a bubble. You agree with that, Peter?
Yeah, I agree because it's tough, right? Because when you look at credit unions, you have to keep in mind that the average size of a credit union is about, again, in assets. The average size of a credit union in assets is only 450 million in assets, approximately. If you look back about 8 years ago, the average size of a credit union was about 140 million in assets. But through consolidation, it's kind of grown or increased to 450. So yes, it's a bubble because the average size of a credit union is pretty small, right? At 450 million in assets, they probably do not have a mortgage division. And so you really are separated by the credit unions that have mortgages or do mortgages and the ones that do not. Okay. And the ones that do mortgages are probably so small, they're not even on anyone's radar. And especially when you think about, small, medium, and large credit unions, there's a massive difference. There are the Navy Federals of the world that are Navy Federal. They're doing whatever they want. And of course, you have the ones in between, like PenFed and the Mountain Americas, and they're all great organizations. But then it kind of jumps down significantly. So, yeah, credit unions are most certainly in the bubble, and I think it's strictly based off size, right? And we're different. We operate slightly different. We kind of stick to our own, also, right? I think that's also part of it. We kind of put our heads down, and we kind of like it that way.
That bubble there, it's interesting you brought up Navy Federal. They historically have the highest net promoter score of any company. Boom, boom. And I feel like credit unions in general, they engendered this goodwill amongst their members that people really enjoy doing work with them. And that's certainly an advantage over a lot of
Oh yeah.
independent. Yeah.
It's Navy Federal has that captive audience, and they do a great job. They invest a lot of money in customer service and training their staff, and this is how you serve our members. Their mission, they have the best mission ever, right? The members are the mission, right? It literally is the best mission you can come up with.
And Peter, maybe we should have started here, but if you could tell our viewers and listeners the mission statement of ACUMA, what you do for your members.
We want to be the go-to resource for mortgage education for our members, and that really is ultimately it. So for us, ACUMA is a education-based trade association that was established in 1996. And ever since then, we've just been growing year over year, and we are a national association with the goal of hopefully converting every credit union that originates mortgages to a member.
In your background, you ran mortgage lending division for a credit union, Lafayette Federal, if I remember correctly, prior to your time at your position at ACUMA, correct?
5 long years there, and prior to that, I oversaw mortgage operations for a community bank in Alexandria, Virginia, Burke and Herbert. And then I just bounced around all throughout the mortgage business, IMBs, large banks, etc., for 20 plus years.
Peter, now that you're at ACUMA, I'm going to kind of flip it here. What's something that credit unions should know about ACUMA that they might not necessarily know, especially for those ones that aren't members yet?
Good question. I think the one thing that for those that aren't members yet, and the one that they should know is that ACUMA as a whole, like when you think of the staff of ACUMA, the 4 people that work at ACUMA, you're not going to find a group of people. You have Krista, Justin, Cameron, and myself. You have 4 people who couldn't be more passionate and dedicated to moving this movement forward and trying to find ways for us to improve the way that our members do business day in and day out. And it's all through access, right? It's finding resources for them to be successful. And if we can provide access to them, to education, to vendors, to content speakers, to politicians, we're going to do it. And we're very dedicated to it. We work long hours, again, with 4 people. I have no idea how we do what we do with such a small staff, but we do it. I mean, every single one of us works 7 days a week. Should we be working 7 days a week? No, we shouldn't, but we do because we love our members. We love what we do, and we're dedicated to making sure that our members can put more families in homes.
Well, as a quick follow-up to that, then and you don't have to reveal any secrets here. Does ACUMA have expansion plans? Or answer that, please. But also, what do you view as success for ACUMA?
I have a short-term goal. It's not really short-term. I'll call it medium-term goal, and then, well, short, medium, and long. So short is we have a list that we produce, and we send it out to all of our members, and it's almost like a scoreboard list. It's an internal list. It's the top originating 500 credit unions. I mean, right now, about 60% of those credit unions are members. It's our goal to make all 500 of them members. So that's goal number 1. Goal number 2 is every credit union that originates mortgages becomes a member. After that, goal number 3, the rest.
Global domination.
Global domination, my friend.
How many I know you guys have over 400 members, right? Which is really impressive.
406.
406 members. And how many?
406 credit unions, 20 CUSOs, and 140 vendor members.
It's awesome. How many credit unions? Do you know how many credit unions there are in America?
There are approximately 1,300 credit unions that originate mortgages
Oh, wow.
and just shy of 5,000 credit unions nationwide.
Okay. So you got like a third of them already. That's pretty damn good.
We need to work harder though.
Good stuff. And
Yeah.
how are some of the ways that, obviously, you guys seek to be an education provider for credit unions in the mortgage space. Any other creative ways that, you're providing value for the members? Obviously, the conferences, which are, incredibly valuable and collaborative. But what else are you guys doing for the members? I know you do some smaller events too throughout the course of
Yep.
the year. They're a little bit more intimate, a little bit more round table-y.
Yeah. So, I mean, keep in mind, we are nowhere near to where I think we need to be as far as fully supporting our members, but we are most certainly leaps and bounds ahead of where we were when I came on board. Like right now, we provide our members with 4 events throughout the course of the years. We do a summit, which is 2 half days, really experience-based learning. Half day followed by an event, an experience, and then another half day in the morning. Like this year, we're going down to actually Navy Federal. So we'll do a half day of some structured content, then round table, and then we'll go to a baseball game. Then we'll go out to the following morning back for roundtable discussions. Um, we're actually really looking forward to it. Who doesn't like minor league baseball? And then we do 2 workshops. They're really twin events, East Coast, West Coast. Something about the Mississippi that people don't like crossing for some strange reason. I don't know why. But they're in Savannah, Georgia and Seattle, Washington this year. They're really just basically back-to-back sessions, like one big breakout room that they're just back-to-back sessions. And then we do our big annual conference, which obviously you saw and you witnessed, which is just a behemoth, right? 700 people in a big convention center. But then we also do other things. We used to put out, a magazine, a semi-annual magazine, and it was great. It provided our vendors and subject matter experts that we met throughout the industry to contribute to this magazine and provide thought leadership. We actually decided to move that virtually and have it be a more regular cadence every single month. And so we're going to start bringing that back. We also put out our insights, which is so we started probably about 2.5 years ago, which are 5 different publications that we put out. And our insights are designed to be policy updates, a general update from Washington, a general market update, and a compliance update. I think I might be missing one. But then we started our own podcasts, among other things. So, and of course, we also have ACUMA services, which is basically a marketplace for our members to go and get discounts on the resources that they need. So we do our best to stay as busy as we possibly can and provide our members with as much information as they possibly can.
Still can't believe you only have 4 employees. And like when I first got to know your organization, that was my first. I was in disbelief when I came to the realization of how small the organization actually is. So you got great people, and
I'm
they
still in
do, yeah.
disbelief.
Mhm.
That was
Every
half
single
my,
day.
Peter, that was half my expansion question. Are you planning on expanding staff-wise?
I'm actually trying to hire 2 people right now. And it's not easy trying to hire 2 people at the same exact time because interviews take a lot of time. Just a
So
lot.
I'm going to go off camera because my internet's telling me it's unstable again. But you've done a fantastic job, Peter, of developing a very good reputation in the financial services industry, and I want to congratulate you on that. How do you think you've done as well as you have without making any enemies, or some would say even raising eyebrows?
I mean, I'm sure there are a lot of people that don't like me. Um,
Okay.
I mean, sure, there's actually a lot of people that don't like me, but I mean, I don't know. It's I kind of keep to myself. I learned a long time ago, and this is something I learned from my father. It's just keep to yourself. Never burn a bridge if you never if you possibly can't, and always treat others the way you want to be treated. Kind of sort of follow that golden rule. Now, yeah, I mean, granted, you could easily argue that the golden rule is a something that reflects on yourself because you want people to treat you a certain way. But for me, it is something I live by, something I teach my kids, and I always do my best to treat people with respect. So I hope people would treat me with respect. Um, and honestly, it's more of a matter of I want this organization to be taken seriously as an association that is going to have a voice for our credit unions because I don't necessarily know if it has been in the past. And the only way for us to be able to do that is to put our heads down and do the work and not just ignore what everyone else is doing. Right. So, and we talk about that a lot internally. We can't care what anyone else is doing. Let's just focus on us.
You're a better man than me. My dad is very good at not burning bridges. And my dad also has a killer jump shot. Like in his Saturday morning basketball league, he shoots like 70. I'm not exaggerating. He shoots like 75% from the field. He's like the Steph Curry of 60-year-olds in this league. Never taught me not to burn bridges and never taught me how to shoot a basketball. I don't quite get it, but that's good that you've taken those values to heart. I'm sure it certainly helps out, especially as you try and expand here.
100%. Absolutely.
This is the big picture presented by our friends at Depth, leading public relations, communication strategy, and brand building firm for the mortgage industry and fintechs. Peter, and this wasn't in our show notes, I apologize, but construction lending obviously poised to become a much bigger piece of the real estate finance and mortgage lending pie as we move into 25 and beyond. And one of the advantages of credit unions, a lot of independent mortgage bankers I'm working with trying to figure out construction lending, ways to, put a good construction lending product out there without having the benefit, like credit unions have, of deposits to lend against. But how do your members view the construction lending opportunity as we move into 25 here?
Good question. I mean, a lot of my members have already adopted construction lending. I mean, credit unions as a whole tend to have some form of portfolio construction loan product. It tends to be pretty popular with them. But at the same time, I did see a lot of credit unions pull back on construction lending last year. Now I'm hoping that there's a little bit more of some reinvestment in it for next year, especially as we focus on affordable housing. It's going to be pivotal. The tough part is like you can't really focus on, you know, big box builders that focus on affordable housing because that they're not going to, right? And so having a credit union that can develop a construction to perm affordable housing program could be the key to our success when solving that issue. Um, so I'm hoping that they turn that switch back on. They have the capabilities. They've already invested in technology, whether it's was it Land Gorilla or Build? I mean, so they already have it, right? Brush the dust off it, get your people trained back on it. They're great products. You can sell them the Fannie Freddie, right? The FHA one's a pretty good product too. And what they just improved the guidelines on them. Now's the time more than ever to take advantage of it, in my personal opinion. I developed the construction program at Lafayette. I thought it was fantastic. Kind of sort of broke my heart when I found out that they stopped doing it. But I mean, again, 2023 and 2024 were tough, and I totally understood why they stopped. I mean, and that was the case for a lot of credit unions, and I hope they start.
Because people, people think, I think a lot of people think depositories, oh, they could just do construction lending whenever they want, but it's very complex. You have, interest rate risk concerns, liquidity concerns, putting fixed rate loans in the books. Like if you would have done a bunch of construction, like a lot of lenders did it when rates were 3%, that you can't sell. That stuff sits on the books and becomes underwater when rates go up to 7%, and you got to hold capital and cash against it. So not quite as simple as, many think, oh, depositories, they can construction lend whenever they want. It's not quite that simple, right, Peter?
Well, it's also, the expertise associated with it, right? And if, keeping that expertise on staff, that's part of it. It's, the type of construction that you're targeting, right? Are you targeting just $1 million construction loans? Then that's an issue, right? That's probably not the type of product that you want to target if that in most areas. But you're right. I mean, and it also, if you're also not using that construction loan product to get that member to transfer their assets over to your credit union, you're also doing it wrong.
Peter, that gets into something that we touched on briefly earlier, and that is that credit unions, much like a bank, have the ability to put loans into their portfolio. Wondering if you have insight, whether it's construction loans or portfolio loans in general, how much similarity do various credit unions have in their portfolio underwriting? Is that something that you track?
We don't really track it, but I mean, it's. I would say when you look at a community bank and a credit union, and the ability to offer that type of flexible underwriting, or the ability to explore flexible lending solutions like a community bank possibly would, I would say a credit union has the ability to do the same exact thing. Low to moderate income, non-traditional credit. Credit unions have the ability to do the same thing. It's just what's their risk appetite, and that's really up to them to say. It's, could they do 100% financing in this market? 100% they could, right? Could they offer a program that goes down to 620, technically subprime, if they wanted to? Yeah, they totally could. But again, it all depends on what their risk appetite is. But it is all, could they do that stuff just like a community bank? Yes.
Are you seeing trends among more successful credit unions, either in product offerings or what they're determining, servicing, whatever it might be? Are you seeing trends among more successful ones?
Not really. I would say the ones that I am happy to see as far as trends go are two things. The more credit unions are starting to look into and explore government lending, and starting to explore and partner with HFA programs. I think the fact that they're actually investing energy into both of those things is a sign that you know they're taking these as not so much as a luxury, but more so as a necessity of things that they have to have, right? Since I came on board, we've been discussing these things at every single event that we've put on. The need to have government lending, the need to have HFA programs. They're viable loan programs to have as part of your product suites. It seems as though more and more often, as we go to credit union events, it could be our event, it could be an MBA event, it could be a small regional credit union event, like a local cure-in, government lending and how to adopt FHA or how to bring it on, as an example, is coming up more and more often. So I'm happy that that trend is popping up, because we've been talking about it for 3 years, and credit unions need to consider FHA, VA as an excellent loan program for them to adopt, especially for affordable housing.
The advocacy front, Peter, any advocacy hot buttons within real estate finance, mortgage lending for credit unions heading into 25 here?
So keep in mind, like we don't
You're not in the
specifically,
advocacy piece of it.
we don't,
Yeah.
but for us, we do educate our members on the policy issues impacting them
Mhm.
as much as we possibly can. And so if there is an RFI that we feel as though will impact our members, will we respond? Yes. If there's a joint trade letter that we feel as though is appropriate for us to join in on, will we join on it? Yes. Right now, are we watching, for example, the data broker rule? Yes, we are. I think that's a very interesting proposed rule out there right now that's very intriguing, that the potential for credit unions to possibly be considered a credit reporting agency based on the amount of information they collect from their members. Again, that's intriguing. So again, we don't necessarily advocate or lobby per se, but we'll always pay attention. Again, we're paying really close attention to the executive orders coming out. We're going to start sending out a weekly executive order tracker to all of our members just so they can stay on top of it. But yeah, and keep in mind, we never responded to RFIs prior to me coming on board.
And then the technology side of the business, Peter, credit unions, the stereotype, slower to move on tech, better service, better stickiness with their customers, maybe a little slower to move on tech. But I would argue that could be an advantage right now. I mean, I have so many clients locked into crappy tech deals with
This
the
isn't a tortoise and a hare thing, man. It's just not.
but where they are, I guess, with technology in general. And it's tough because there's not a lot of revenue and volume right now in the mortgage industry. It's not the opportune time to invest in new tech. At the same time, I think tech is evolving right now. Like some of the tech that I've seen these last 6 months on the mortgage side, it genuinely optimistic about its ability to drive true ROI. Like, to this point, it's been very hard to find one mortgage lender that could point to true ROI of adoption of a tech platform or product. But I think that could change going forward.
Right. I mean,
And
and I agree with that. I mean, here's the tough part: is that credit unions tend to be always behind, right? And and I'm hoping that changes in the future, and I believe that it will. They want to invest in technology. There's two parts to it, right? There's, the base fundamental portion of technology, LOS, POS. Yeah, I think that they have the ability to invest in those things, the main components. The complementary things that make the rest of the technology work properly, the product and pricing engine, the Truve or the Argyles of the world, the other things that make their lives more efficient, or the trains, again, the things that are making efficiency happen. That's the things that tend to slow things down, that an IMB may invest in, that still keeps them ahead of the game. But again, that's just a monoline business that has deeper pockets, that has the ability to do that. But again, going back to my original statement, the average credit union is 450 million in assets, right? They don't have, these deep pockets to invest. Most of this technology isn't built for a credit union that has that type of budget, right? The good news is that new technology is coming out that is somewhat designed for the credit union of a smaller credit union, that medium sized credit union. We just have to get credit unions to realize that you don't have to go out and get the biggest LOS out there just because it's the biggest LOS out there, right? Sometimes the biggest LOS out there isn't the best one. Yes, it is the biggest. It's been around probably the longest time, but you probably don't have the internal capabilities to manage it.
this like Voldemort, he who will not be named, the biggest LOS, nobody knows.
I didn't say anything. I didn't
To,
say anything.
to Rich's point, and you kind of mentioned this with the tortoise and the hare, Peter. It seemed like a couple years ago, everything was how add this to your tech stack, add this. Companies were being inundated. Hey, this is the latest. Add. Now we're at the point where companies are really saying to themselves, and I suspect this will be a trend at IMB next week. What can we cut? What is something that we can get rid of? We can change our expense structure a little bit. How do we really keep the tech that we need and properly train our staff to get the most out of it? And I think that's a 2025 thing for the industry for sure.
See, at this point, I don't know if you can.
No.
I just don't know if you can cut anything. That's the tough part, right? You need that product and pricing engine. Most point of sales, the modern point of sale, the LO lives in that, right? You want your LO out of the LOS, right? And so you can't cut, obviously, your point of sale. The Argyles, we'll say that the verification services of the world, you can't cut them because with a click of a button, you get assets and income verifications. The AI platforms that allow for efficiencies. Okay, maybe those are luxuries.
Peter, you're lucky your organization is like 4 or 5 people because you're not great at cutting expenses here. I'm not trying you do as a CFO.
I'm just going down the list. So I'm just saying, it's like if I can process, if I have one of those AIs that can allow me to process 3 more loans a day rather than 3 more loans a day, that's improved my efficiency. I don't know if I can cut that. Right? So that's the tough part. And maybe and most credit unions are on an enterprise CRM. They're not on a mortgage specific CRM. So if anything, they're not worried about cutting that. So I don't know what else they could cut.
I feel like they've layered in certain tech trying to appease top producers. I think there's ways that they could get leaner, and it's a case by case basis for organizations. But
Yeah,
sure.
maybe.
I debate you, but we're out of time here.
As always, the time flies by, but Peter, I want to thank you so much for joining us. Very enlightening conversation, taking us inside the world of credit union mortgage lending and all the great things that ACUMA is doing for their members. Thank you so much for joining
Absolutely.
us.
Thank you.
And I want to thank my co-host, Robbie. Thank you, Robbie. Always great to see you. And especially after the Buckeyes beat Texas. So, so I promised I would mention it.
My Knicks are going to beat your Cavaliers this.
It looks like they're on a crash
Yeah.
course. Second round, it looks like. That could be a Knicks Cavs. We might have to make that one interesting.
In the figures of Steph Curry. I know.
You guys did knock us out last year. So, yeah, you got that on me. Want to thank also our partners at Depth. Thank you very much for supporting the show and making these great conversations possible. And most importantly, I want to thank our attendees. If you're watching the live on Zoom, you can go to chrismancommentary.com to get signed up for the live shows. Or if you're listening on podcast or watching on YouTube, I want to thank you for spending part of your week with us. And as always, we'll be back next week, Thursday at 3 p.m. Eastern with Mark Calabria, the former FHFA director, coming back on the show. Be interesting to get his perspective with a new FHFA director now nominated and his thoughts on all things Fannie, Freddie, and conservatorship. So, but until next week, have a great rest of the week and weekend, everyone. Thanks again, Peter. And we'll see you next Thursday, everyone. Have a great week. Take care, everyone.